We're going to do a brief video on T-bond futures, bond futures, and we've got a daily chart of the ZB T-bond futures from the Chicago Board of Trade. ZB is a signal. It's a daily chart with a 200-day moving average, and that's in blue. We'll take a look real quick and see what's going on. You notice yesterday we put in a huge rally, almost over 3 points, and closed above the 20-week moving average for the first time since the week of August 9th. That may or may not be significant. It remains to be seen. We can see that the bonds are already overbought. They've rallied significantly, and so we'd be looking for them to pull back. Today's a holiday. Today's Friday the 11th. Monday's the next day the bonds will be open. We're looking for them to pull back a little bit, but what we're trying to do here is get on this daily chart here, get this green 5-day moving average above the 20-day moving average, and put in a bottom on the bond market here. So here's a bottom that was put in on October 24th. They came down and tested the heck out of it. I'm going to show you a weekly chart here in a minute. They tested it really good, and I'll show you that on a weekly chart, and then they've rallied this up. So this is a really positive sign for lower interest rates if this bond bottom in the bond market holds up. It's a little early yet to say, but you can see we had a significant decline all the way from August 2nd, just almost straight down. You can see the 20-day moving average was virtually straight, and now we've closed above it. So this is the weekly close here. It's Friday's a holiday, so this is a good close for the whole week. Let's go take a look at the weekly chart, because we can now use that as a reference. We can see the weekly chart for the first time is closed above the 5-week green moving average here, and that's the first time it's done that since the week of July 25th. What we're trying to do is backfill a little bit, get some support, and rally this price up. You can see that here was your week 24 of October low of 17.19. They pushed this bond price all the way down to 18.03 this week, and then rallied it all the way up to 124.10. So it's a really good test of the bond market to see if there was any short sellers in there, see if anyone's going to panic and dump it, and they didn't, and they bought it and rallied it. So this is a really good psychological test to see if the bonds are ready to bottom. Are they? I don't know, but it looks like it. So in order for these bonds to rally further, we need to get this 20-week moving average. We need to get this turned back around, and that's going to take a long time. Probably, this is a weekly chart, it's probably going to take a month and a half at least to get above this 20-week moving average. It's hard to say. Maybe we'll get some serious buying in here, but in general the bond market doesn't do this. It just, in general, it's more like this. And keep in mind, each one of these bars is a weekly chart we're looking at here. So we need the bond market to come in, put in its bottom, test it like it did here, get the 20-day above, below the 5-week, the 20-week below the 5-week, and prices above everything, and then we can begin to advance up in a nice gradual bond market. These are blow-off top moves right here, these March 20 moves. You don't get those kind of moves in the bond market in general. The bond market moves fairly stably, and you can see if we can get this kind of movement, some sideways, some more, get a 20-week under the price, we have a chance to get out of here, but way too early. This has got to come back down, back and fill a little bit, and come across probably at least a week and a month and a half, and probably 2 months, and get over here, at which time the 20-week moving average will have moved down, and then we can get above it and begin our march up. Is that all going to happen? I have no idea, but that's the way a technical look would play out. Again, this is back to a daily chart. You can see that's a very significant move in the bond market. In general, you're not going to get that kind of move coming off unless there's a serious change in trend. All, in my opinion, all for entertainment purposes only. Let's go down and take a look and see what RVM Research says about it. We put out algorithmically generated entry prices for bonds every morning before 7 a.m., 1, 2, 5, 10, and 20 trading day holding periods, all for entertainment purposes only. Can't use them for anything other than entertainment. And we've got shorts for tomorrow. Let's see where we are. That's gold. Let's go down here and find the bonds. We've got all kinds of stuff here. This says for the 11th, but today's a holiday, so this is actually for Monday. These prices will be the same. And we've got shorts 121.10. If the bond market falls, it says to short it. If it trades through 121.10, and then as you get above, this is the 2-day. 5, 10, and 20 days are showing if it gets above 124.20, if it trades through that, it's a short. Again, all for entertainment purposes only. And then it's got some higher probabilities here, which are slightly different. You can take a look at them. But in general, shorting if the market falls, shorting if the market rallies, and staying away from it if it's in between those two ranges. So that's what we've got for you today, all for entertainment purposes only. You can get access to 190 stocks, the major forex pairs, BTC, crypto, and the most liquid futures contracts, including T-bonds, all before 7 a.m. at rvmresearch.com. Link in the description below. There's a free access and a free trial, no credit card required. You can head over there, put in your email address, and get immediate access. Everything's for entertainment purposes only, including entry prices and my commentary. Can't use it for anything anything other than entertainment. You definitely trade at your own risk, and you should always do your own analysis. Please click the like button if you like this video. Please subscribe if you want to do that as well. And if you have a good ticker symbol you think a lot of people would be interested in, leave it in the comment section below, and we'll consider doing a video on it.